Touch base with the management of Indostar. The case for a chat here essentially being the company's eyeing 30% growth in disbursements. Companies eyeing doubling their AUM in due course, and Morgan Stanley's initiated coverage on the stock with an overweight rating, putting a target of 650. We have with us then R. Sridhar, who's Executive Vice Chairman and CEO of Indostar Capital Finance. Sridhar, it's great to have you on the show. Thanks very much for taking out the time. In your conversation with Morgan Stanley, what did you tell them to convince them that they must initiate coverage on your business and more importantly come out with an overweight rating?
Yeah, the business has been very good. As you know that we have been in corporate lending business, and from last year we have started diversifying into retail, and the disbursements have been excellent. Last 1 year had been very eventful. We have moved from 10 branches to 125 now, and from 100 people to more than 1,200 now. So all these have happened quickly, including the listing which has been done beginning of this year. So that gives us an ammunition to look for big growth this year in all the 4 verticals: corporate lending, vehicle, home loans and SME. And our current run rate is around 600 crores per month, which should give us about 40% growth in disbursements compared to last year. And the AUM is likely to be in the 5 digit. We closed at around 6,500 and we should cross 10,000 crores by March 19. So the asset quality which had been excellent in Indostar, since the retail businesses are in the initial stages, we look at excellent asset quality in all the verticals. So looking at all these, Morgan Stanley has released this report recently.
Good to hear that, and that's really reflected in the stock price as well. But tell us a little bit more about what branch expansion plans that you've lined for yourself. What are the geographies, the states that you're hoping to open new branches in, and would you have any inorganic growth plans as well in the pipeline?
See, branches in the phase 1 last year we wanted to go to 100 plus branches, which gives us sufficient network to look at growth. So we opened 100 plus branches. Today we have about 125 branches, and our plan is to make these branches break even this year. So for break even, these branches will require about 10 to 12 crores of AUM, and as per the current traction of disbursements, we are confident that all these 125 branches will break even by the end of this financial year. Then we will look at further expansion of branches, and these branches are in about 15 states covering south, west and northern regions. We have not gone to the eastern region strategically in the phase 1. We will look at that in the second phase.
But your ROE is still lower than what we've seen with other NBFC peers. What is leading to a lower ROE, and what are you hoping to do to improve the overall return ratio numbers?
Now, being a corporate lending company to start with, the leverage had been kept very low to give comfort to the lenders. That is the reason why we have been able to leverage 2 or 3 times the equity capital, even while we were only focusing on the corporate lending business. Now recently we have raised another 700 crores of capital, which is sufficient for 2 years. About 2020 we have sufficient capital to plan our growth. So as and when our disbursements start happening in 2020 end, you would see that ROE starts moving up. Today because of the leverage, but ROE is a component of ROA multiplied by leverage. So for good companies always it is better to focus on ROA, and our ROAs have been always at around 3.5%. So if we continue to have that, once the leverage is increased, the ROE will start moving up.
What about your product mix? How is it that you see that change between wholesale, SME as well as the retail segment?
Yeah, today out of the four verticals, as of March 18, we had about 74% of the total assets in corporate lending and 26% had been in the retail. That is likely to undergo a change, and we do expect that by 2020 we should have about 50% corporate lending and 50% retail, and over the next 5 years by 2021-22 we should have 25% corporate lending and 75% retail. So, the retail will become the major component in the product mix.
All right, Sridhar, we leave it at that. Thanks very much for taking out the time to speak with us this morning. We really appreciate your views.
Thank you.